In this video we want to talk about good cost accounting and what are the practices and what issues should be looked at in order to bring about good cost accounting. So we'll look at some points related to this. Now, in order to facilitate good planning, effective control and visionary decision making, cost information must be obtained. Generally speaking, entrepreneurs try to work out summary figures of costs, the size of the market, what's required in order to establish a business. And also managers within established businesses need to try and work out what the costs are of production, the cost of raw materials, of assembly, dispatch. Look at the various costs within the organization, because that will help them to make good decisions regarding, let's say, the product price in the market, or their ability to invest in expansion programs or introduce new lines. In other words, the decision-making process is facilitated by good information. And the good information in this context comes from the cost and management accountants who work to derive accurate figures to give to management to help them to make the good decisions. So cost accounting information is always needed for managerial planning, control and decision making in both the private and the public sectors. Within government there is the same need for information so that effective decisions can be made, proper decisions, well costed decisions, decisions that are not going to lead to a waste of public money. But in the private sector, it's a battle for survival. The management must make good decisions if the company is to prosper and continue. So the need for good information, the need for cost accountancy is very strong in both sectors of the economy. And it's imperative that cost accountants have certain qualities and approaches to their work to enable the information to be good quality and to be reliable as far as the decision makers are concerned. The information should assist management towards bringing about positive changes in the affairs of the organization. The whole idea of management is to improve the organization, to improve the situation that the company finds itself in. It could be improvements in terms of market share or its position in the market, its reputation, good customer service. Whatever the objectives of the business are, these are facilitated by the provision of good and accurate information coming from the cost accounting section, or the cost accountants, who provide the management with up-to-date figures, accurate figures about costs and different scenarios and different possibilities. So it's a big aid to managerial decision making. Now, the required qualities of good cost accounting information are as follows, and we're going to go through a list of these, just looking at what's meant by good cost accounting information. First of all, relevance. The information should be relevant to the user and the purpose for which it is intended. It's simply pointless for a cost accountant to supply the decision maker with irrelevant information, because it will not enter into the decision making process. So the information must be relevant. It must be, in a sense, focused on the question. The question is, should the business expand production of a particular line or introduce a new product or a new version of a product? Whatever the question is, the information should be as specific as possible to that question, because that makes it most relevant and most useful. Timeliness is also an issue. The information should be supplied in a timely manner for the purpose for which it is required. it's pointless if the management need the information next week and the cost accountant supplies it in a month's time. It's out of date. It's no longer required. It has to be ready for the management to consider when they need it. So it should be supplied in a timely manner. It should be made available when the management require it to facilitate their decision making. And the onus is on the cost accountant to ensure that the information is processed, it's researched, it's calculated, it's accurate, and it's delivered on time. It should be made available within the time period it is needed. The cost accountant should know when the management needs cost accounting information and make it readily available. Really, good cost accounting means that the cost accountant knows when the information is likely to be needed, has prepared it, and is refining the information. So when it's finally called for, it's not just presented, but it's presented in a very refined form, specific to the requirement, and also meets the needs of the management in terms of their understanding of the information and in terms of the way in which they can use the information, and it fits in with different alternatives and scenarios that they may be considering. It should be reliable and accurate, of course. The information should be accurate and produced in compliance with the relevant statutory regulations, the professional requirements, or managerial guidelines. Accountants belong to professional accountancy bodies, and those bodies have very strict and very prescribed requirements as to how information should be reported, the reliability and the accuracy of the information, and it's important that the accountants adhere to the guidelines set out by their professional bodies, because that's what's expected of them. They are professional, and the management within the business will expect their accountants to be up to date with current practice within their profession. So the information should be reliable, it should be accurate, and every effort should be made on the part of the accountant to ensure that this is the case. If it's reported according to the statutory regulations and the professional guidelines, this would make the information both accurate and reliable, because the guidelines clearly state the importance of these issues, and professional accountants adhering to their professional bodies and the recommendations of their professional bodies will do everything they can to produce accurate and reliable information. There is need for checking or certification before it is put to use. And if that is the case, that should be done. It should be done by the accountant. The accountant should not just present the information to be reliable and accurate, but must make sure it is, must double check it, must run across different what-if scenarios to see if it's robust, if it is reliable. So if it does need checking, it should be done in advance. The information should be reliable, it should be understandable. Understandable in the sense that the information should be simple to understand. It should not be in a convoluted or a complex form that may confuse management and lead to perhaps bad decision making because they didn't quite understand what the information meant. There should be very clear statements about what the information is saying. The cost accountant has to strike a balance between simplicity and complexity while producing the information. And ideally, complex information should be broken down and presented in very simple terms. That's not in any way condescending towards management. It just simply almost guarantees that the decisions made by management are done clearly, that clearly understand, there's no ambiguity, clearly understand the nature of the information and what's contained in the information. It's not in any way ambiguous, so that the decisions are clearly made. So it should be clearly understood information. There's also completeness. The information should fully disclose what is required. It's not to be released in a piecemeal manner. Incomplete information, accounting information, is dangerous to managerial decision making. The information should be complete. It should be set out as a document, not released in bits and pieces, because that can lead management to form opinions or start going in directions which is not what the information in its entirety would suggest. So it's important that the management receive complete information in one go, with clear statements and recommendations and key points indicated. Not in dribs and drabs, not in little amounts at a time, which, as I said, could lead management to go in a wrong direction or misunderstand the full picture. The future, as it should be understood, has both risks and uncertainties, and these are not to be decided upon using incomplete information. Incomplete information can, as I said, lead the management down the wrong path, get them committed to a particular line of thinking, a particular way of dealing with an issue, which perhaps the full information would not have suggested. So it's important that all of the information is released at one time. There should be objectivity. The information is not to be subjective or personal to the provider. As far as possible, the opinions of the writer, the cost accountant, should be kept out of it. It should not appear in the document. It should be based on objectivity. It should be based on data, collected objective data, and analysed using objective techniques. It should not contain the personal opinions of the accountant. It should be the type that would assist management towards achieving organisational objectives and goals. So it should be aimed at what the management are trying to do in terms of achieving their objectives and goals, but it should not be biased or slanted towards the opinions of any one person. It should be as objective as possible. Cost accountants should learn to remove all subjectivity in the information that they give management for planning, control and decision making. They should purge the document of any subjectivity if they can. They should go across the document and try to expose any subjectivity and perhaps even highlight it if it does exist in the document, highlight it for the management so that the management can discount it if they so choose. But ideally, documents should be as objective as possible. Should be comparable. There should be comparability in the document. The information should give room for comparative analysis with information provided in the previous time periods. It should, where possible, provide other forms of comparative analysis as well for easy performance assessment. So here we have two concepts. We have the first concept, which is it should provide information and give comparative analysis with previous time periods. We call this time series analysis. The cost accountant should look at previous reports into certain issues and present those previous reports with the report that's been called for, so that the management can compare what happened in the past with what's currently under investigation or under review. So it's comparing over time what's changed and what the management did in the past. That's one type of comparability. Another type of comparability is what we call cross-sectional. And this means that the cost accountants may be able to present pictures of what other organizations are doing at the moment, so that the decision makers know what the recommendations or the data is recommending from within their own organization, and also able to compare that with what other organizations are doing. Now, of course, it may not be possible to get that information or get a lot of that information, but wherever it can be achieved, or wherever figures can be found, perhaps sometimes figures can be found because they are publicly provided by the government in the form of summary statistics. Whatever figures can be produced in that way would be a valuable tool for management in their decision-making process. So the information should be comparable. As far as possible, management should be able to look back on what happened in the past, look at the present proposal, look at the data, look at the report that's been given to them by the cost accountants, and draw up a good set of recommendations following on from that. Or, if possible, and it's not always the case, but if possible, they should also be able to look at comparable organizations and what they're doing or what their experiences are, and make decisions with those in mind as well. So that's the essence of good cost accounting. These are issues that need to be taken into account when presenting reports, when cost accountants present reports to management. And that's all we're going to deal with in this session. So let's leave it at that and say thank you for watching.